Thank you for joining us today. The multi-funding team is proud to partner with Signature Analytics for the first session of Building Blocks for a Winning Business for your accounting and finance team, which is led by Pete Heald and Jim Peterson. Pete Heald, CEO of Signature Analytics, leads a team providing outsourced accounting and CFO advisory services with over 20 years of experience in growing companies. He has a unique view on the value and benefits of outsourced accounting. Pete is passionate about helping companies improve their outcomes and achieve their goals with better information and understanding of their organization's numbers. Jim Peterson, Director of Operations and VP of Finance at Signature Analytics, has 12 years of accounting experience and has been with the company for 7 years. He has helped lead accounting and finance transformation in numerous organizations with a focus on efficiency through improved processes and technology. Jim is currently focused on improving Signature Analytics operations to support their continued growth nationally. And the core focus of today's session, The Right People, is on finding out the building blocks of turning your accounting and financing team into a competitive advantage. And thank you for joining us. I'll hand it over to you, Pete and Jim.
Thank you very much. We appreciate it. Go ahead and jump in here. So today we're going to talk about some of the building blocks about making your accounting and finance team a competitive advantage. And ultimately, as a CEO and a business leader, what we really care about is the end result, right? The reporting, the story we understand around our business, being able to make better decisions based on good decisions, or I'm sorry, good information. So really, as Signature Analytics, we look at it in 4 different places. We look at first, the foundation is people, and then building on top of them processes, leveraging technology to make those processes and people more efficient, and ultimately the types of reporting that we want to create and use to support better decision making as a company. Before we jump in, though, just a quick overview of Signature Analytics. We're a fractional outsourced accounting and finance team. We started 16 years ago. We have a national focus. We have over 65 employees across the country. We really focus on growing companies and nonprofits, typically between 5 million and 100 million in revenue. We do work with some, startup firms, and we also work with some firms larger than that. But that's really kind of our core area. Today, we're going to keep this short and sweet. We're going to talk about the first block, which is the right people, and then we'll follow up in the future with some of the other ones. So with that, we really want to talk about 5 things today. When we talk about people, we're going to talk about the capability of the team, the capacity that they have to do the work, their ability to focus on the work, and then checks and balances. And finally, with all that, how, attracting the right talent, what's the situation with accounting talent today in today's market? So we'll jump right in. So when we talk about capability, first and foremost, it's about their ability to do the work, their background, their education, their experience in accounting. So that's core to that, right? The second part of that, though, is their ability are they good with emotional intelligence? Are they good communicators? There's other parts of a team that you're going to want as a leader in your organization to make sure they're able to effectively communicate with you. One thing we talk about a lot is looking beyond the titles. So there's can't really trust titles on resumes. What we do at Signature a lot of times is beyond looking at someone's background. We actually do formal tests of accounting to make sure their technical capability is aligned with the role. Another way to look at that from a different perspective is looking at sometimes comp ranges. When we walk into a client and we find a CFO that's making $80,000 a year, we recognize that's probably a bookkeeper with an overrated title. Titles don't mean anything. It's really the capability behind them. Beyond that, you're looking at specialized skills that you might be leveraging over time. So some people might have history with audits coming out of larger CPA firms, might have tax understanding, etc. Ultimately, what you want with capability, though, is setting up the right systems, the right tools to minimize errors down the line, right? So that understanding, that awareness and capability to have the right schedules, to help create the right processes, again, which we'll talk about in another session, as well as make sure you're using the right tools that are going to make the downstream reporting and everything more accurate, relevant, and timely, because you're reducing errors and you have the right structure in place to start. Ultimately, that leads to results. Moving on, the other one is capacity. We talk about how many hats people are wearing. And as Jim and I have gone into a variety of clients, there's one that we see often, which is the founder or CEO wearing the hat of an accountant, the hat of a salesperson, trying to do operations. I'm really having way too many hats on. And what we found, and outside of an accounting firm, very few CEOs or founders start companies to be an accountant, right? They do that because they're small, it's easy. They want the control of being in the books, but eventually they need to get out of that business. The other thing we see quite often is either overhiring. So you have a CFO who is now doing the job of a controller or even day-to-day accounting. So your company is spending a lot of money to do the basic accounting. Or even worse, the company is leveraging a staff or a bookkeeper to try to do more controller or higher strategic roles, right? Which is, they just don't know what they don't know, and they get out over their skis and aren't able to really drive some of the value and wind up kind of creating either lack of reporting, inaccurate reporting, or just bad numbers in general. We do see anyone can do accounting where, hey, this person is great in HR or ops or admin. They have some ability to do some extra work. We assign them the work. They might be able to do it, but because they don't know the ultimate use of that information, a lot of times we find that they just don't, they make common mistakes because they don't know what they're supposed to be doing. They have no training and they don't know the whole process. And finally, the other part of capacity is a lot of times we see a great team in place, but then there's things like rolling out a new ERP system, and the company's expecting that same team who has a full-time day job to be able to roll out and develop and implement a whole ERP system. Or maybe they've triggered some things because of bank financing or at a nonprofit a certain size where they have to be audited. So now they have to go through audits, and they have the capacity and frankly the capability to support the audit process and know how to do that efficiently and effectively. So it's another example of where we're seeing the capability and the capacity have shortcomings. So once you get capability and capacity of your team, the next part is focus, right? So a great example in focus is we have a client who takes who has an invoicing process, right? They take 3 weeks to work through their invoicing at the end of the month. So it can be done in a more timely fashion. It could probably be done in a week if they had the ability, the person who is responsible for it had the ability to focus. Since they have competing priorities and they are putting that down and working on something else or having to follow up with different people, to professional service organization to get data back, that invoicing process pushes out 3+ weeks, which then pushes out the monthly close. Frankly, elongates the cash cycle from when work is done to when you collect the cash, because you're invoicing later as well, right? So creating time and making sure your team has the ability to focus on what's important to be able to move the process along efficiently is the third kind of pillar of really making sure your team has the ability to complete and drive accurate, relevant, and timely reporting. Along the way here too, if you guys have questions, please, you can you could chat them to multi-funding, and we will absolutely, what we want to do at the end today is answer any questions you have on this material. Plus, if you have questions or things specific to your company, then we definitely want to be able to speak to that and support you in that as well for the people side of this. Jim, maybe you could jump in on this one.
Definitely. So going through the next pillar, which is importance of checks and balances. The first piece of this is really ensuring accuracy through layers of review. What we've seen is that this is key to be able to identify errors before finalizing financial reports or transactions. With this, it's challenging for a preparer for their own work to review their own work, which is why it's always recommended that there's a second person to do the review. The next piece is the segregation of duties to prevent fraud and errors. With this, dividing responsibilities between more than one member helps limit the risk for fraud and errors. Great example of this is that when it comes to bill payments, it's important to have someone who prepares check runs and another who processes those check runs as the approver. This will limit the risk of fraud from occurring. And the last piece here is enhancing accountability within the accounting team. With this, having clear assignments for roles and responsibilities, along with regular performance reviews and feedback, fosters a culture of ownership and accountability amongst accounting staff. With this, when individuals feel like they own something, they're more likely to handle it with care and caution, as it is a direct reflection of their own work product. Most individuals like to be somewhat perfect in what they do, so it's always good to make sure that they know what their role is and what their responsibilities are. Overall, implementing robust checks and balances in the accounting process is crucial for ensuring accurate financial reporting, preventing fraud, and promoting a culture of accountability within the organization. With this, you'd be amazed at the different situations that we've seen as a company being consultants. And it's just a very important thing to have internally so that you can prevent that from happening too.
Yeah, ultimately, the point of this is you need more than one person. And that you're able to do all of these if you have a few layers. So moving on to just the challenges that we're seeing out there in finding great people. One, we have a low unemployment in general. I think accounting, it's even probably lower than the national average. And, part of that, if you look at some of the data out there, is the America Institute of CPAs. I think that's the name of the organization, AICPA. They came out and said 75% of their members are over the age of 50, right? Which is a pretty surprising number for the main association of CPAs. Part of that, stems from, if you look at, there's another report they did that said, between 2012 and 2021, the comparison between those 2 years, there was a 17% drop in accounting grads. So there's less people graduating with accounting degrees. And then there's the CPAs out there are aging out. And part of that, the reason behind that is, one, there's a lot more STEM careers out there. So where people used to go into accounting in college, they now are pursuing other STEM careers. There's a variety of different paths post-graduation for an accountant to go into. Historically, again, they would go into tax or audit, or maybe into industry. And when we say industry, into a company. Now there's a lot of firms like Signature Analytics out there, consulting firms, that are drawing in some of the best and brightest because we give them a clear path of growth, right? A career trajectory, mentorship, the ability to work on multiple industries and multiple roles, kind of a faster time frame for promotion because they're getting tremendous amount of experience. So as a company, it's getting harder and harder to find that A quality talent and then recruit them in. So we're seeing a lot as we talk to recruiters around the country. We're seeing recruiting for a controller or a CFO role take upwards of 90 to 120 days. And that's with really good benefits and a strong compensation package. So it's not, and we're also seeing someone who is growing from, having built up a team, getting to the next level and saying, okay, I need to improve my controller, for instance. The comp between what they've been paying when they were a smaller firm to what they're going to need to pay for a growing controller who's going to take them to the next level sometimes is pretty eye-opening. And a big jump for a company to make. So ultimately, what we talk about is the value of fractional firm. One, first and foremost, is scalability, right? You have the ability for a firm to increase resources and capabilities with a company as they grow, and conversely, if there's a slowdown or the ups and downs of the business cycle, ability to shrink operations as well. So it's not a fixed resource anymore. It's no longer a fixed cost. Then you have the expertise and capability as you get into things like audits or an ERP system upgrade, or maybe looking to buy companies or even sell a company, having that expertise and capability to support those different types of engagements or opportunities and not have to have that person on staff when you don't need that level of expertise. The other one, again, what we see and where we normally get called in a lot is there's turnover of a controller, of a CFO. So when that happens, again, if you're looking at 90 to 120 or longer to backfill that person, you don't have the right team in place to support that. A lot of times we see there's no processes in place, no SOPs. That can be really detrimental to decision-making and moving the business forward. So with a third party supporting you, when that happens for us, we have 65 employees. It's an easy backfill. We don't miss a beat. We have systems in place and processes in place to support that. So there's a lot of reasons why this sector is growing so much in supporting clients in small to mid-sized business. Ultimately, what we say is you need the right people doing the right thing at the right time. That is the foundation for getting good data, for getting good reporting and making better decisions in your organization. And ultimately, that's what we do.